At last, the RBA pauses rate hikes. Is the pain finally over? Hi, everyone, and welcome to another episode of Insights brought to you by Ainslie Bullion and the Gold and Silver Standard. Today, we welcome back Branko, who's been looking at yesterday's decision to pause rates by the RBA, sort of digging into that a little bit deeper, and has some interesting insights to give us today around what that sort of means for us going forward. So, how are you going today, Branko?
Good, Chris. Thanks for having me back. Keen to discuss today's topic.
Yeah, it was an interesting one. Alex on Monday had said, it was pretty much a sure thing that they weren't going to raise based on what she was looking at. But as you highlighted in the news today, it wasn't quite so clear cut, was it? So, can you maybe start off by telling us why have they paused and that little bit around the uncertainty that was there?
Yeah, bit of background. So Bloomberg did a poll, and it was about 60% of economic analysts thought they would pause compared to 40. And Goldman as well said the move today was unexpected compared to their projections. So it was a bit more mixed coming in, and it's quite a big deal that they've finally made the pause because this is the first time in 10 interest rate decisions. So
Yep.
quite significant. And finally, for at least 1 month, homeowners won't, suffer the consequences of, what's going on and have a bit of relief. So the main reason behind this pause, as far as I can tell, is just the RBA needing to see the broader economic outlook as of now, right? There's a lot of chaos going on, and partially interest rate rises that are actually causing some of these banks to explode potentially. So they need to pause because they don't want to cause more damage, and they want to see, like for example, if the Fed decides to start aggressively bailing out a lot of these banks, and we're still hiking rates, we're going to be obviously very different than what the rest of the world is doing. So they want to align themselves with the rest of the world. They're taking a pause and then just seeing how things pan out from here.
Yeah, and that makes a bit of sense. Like that's the probably safe road to take is just pause and see. Do you think this is the end then? I mean, I know this is a difficult question, but is this the end of that pain for borrowers and mortgage holders? Can we sort of like we see that pause? Should we be going, okay, well, the pressure's now going to be on for them to maintain that. They really can't step into raising again, or how do you read that?
Yeah, sadly, I think it's going to be a momentary, temporary pause.
Right.
The language in the RBA has been pretty consistently, um, during the last meeting, it was, we still want to fight inflation. And in fact, Philip Lowe said he actually still expected further rate rises in the future. So I highly doubt we're going to do a reversal here. However, it is possible that there might be only a few more on the horizon before we eventually turn around. So it is a bit more of a brighter future, but expect more rate rises in the future, I would say reasonably confident.
Yeah. Okay. So that sort of pulls together a few themes from what was being said directly from the RBA, from Philip Lowe. But what I was wanting to dig into a little bit more is this concept of the dual mandate. So we've got interest rates that we look at are really about fighting inflation. And that's what he was saying, wasn't he? That
Yeah.
inflation isn't necessarily under control yet. But the flip side of that is needing to lower interest rates because of financial stability, which is the bank stuff that you were talking about. So we now seem to have, in my mind at least, a little bit of a conflict between one, like that idea of a dual mandate that you've got needing to raise interest rates to fight inflation, but you've also got the need to lower interest rates or at least not raise them anymore to contribute to financial stability, which is under threat. So how what's your take on that? Do you think that one trumps the other? How do you interpret that battle between that dual mandate?
Yeah, so I think there's been a clear prioritization of fighting inflation the past, year, right?
Yep.
And now they're finally shifting their focus because of the global bank collapses that we've seen into more financial stability, and that's what this pause is representing. However, in a kind of ironic, cruel twist of fate, it is very interesting to see that, the more banks, if more banks were to collapse, consequence of bank greed, the average homeowner would actually probably see their rates start to decrease and their financial situation start to improve. So it's quite of an
Yep.
interesting dichotomy we've got here where, if more banks collapse, RBA is going to probably lower rates or at least keep the pause going, and that's going to help homeowners. But if bankers were kind of more responsible, they would continue the inflation fight because that problem doesn't exist. So it's a very confusing situation, but I think that is an interesting kind of cruel irony in all this, in that these bailouts are actually, in some very weird way, potentially having a positive effect on homeowners.
Okay, so that really answers that question quite well, to say financial stability is what they ultimately sort of pick as the one that they need to deal with, but they're being forced into that situation at the
Yeah.
moment due to right, yeah, it is a mess, isn't it? Like it's
Yeah. It's like, if that problem doesn't exist, higher rates for everyone else. But now that problem exists, we've got to shift our focus to fight this, which
yeah,
benefits the average person.
which can, yeah, that's right. Particularly if it results in pulling them back a little bit,
Yeah.
those rates. So what I find that interesting as well, to look at it in terms of where we sit relative to the rest of the world. Do you think that Australia, given the debt levels, and I know you and I have talked about this quite a bit in the past, does this mean that the RBA probably um, has an exaggerated situation here that they have to deal with compared to other countries because our debt levels are so high? Is that how you would interpret this?
Yeah, I think they're going to be a bit more, because our debt level's so high and people have a very high kind of home to debt ratio, they're going to be a lot
Yep.
quicker to potentially pull back those rates and overvalue financial stability in that sense,
Mhm.
because we really need it, because our home market is kind of on the brink edge. Yeah.
And yeah, we've certainly seen a lot of anecdotal evidence of that, with people probably being pushed to at least to their limit. Some people probably past their limit
Mm.
with the raises that we've seen so fast, because wages certainly haven't. We
No.
haven't had 10 wage rises in a row over the
that
over the
that would
last
never
decade.
happen. I
That's
want,
right. So it takes a lot. There's a lot of lag in there, isn't there?
yeah. In fact, the ironic part about that is the like RBA is actually talking about how strong wages are in a negative sense, like the labor
Yep.
market, where so they you're never going to see that kind of wage growth anyway.
Yeah. So, probably the question to wrap up on is the flow on through to gold and silver,
Mm.
because it's a little bit of a pivot from what we've talked about there, but it all is the same thing. It's the same story, and we're seeing gold again today, back up at those all time highs in Australian dollars, and actually pushing towards that sort of level in the US dollars as well. It was not that far away from sort of touching those highs as well, which is possible over the next little bit of time. Um, so I just wanted your opinion on that. And I also, we had a specific question from Lloyd on YouTube on the last video that I did with Alex. He was asking about silver and saying, we talk about gold often in this scenario when we see the flow on of effect of all this stuff going on in the markets. How does that impact silver? So maybe a two-part question there. Can you maybe
Yep.
say what your sort of out or take on this is relative to gold? And then if you could sort of follow up with your explanation around how silver plays into that as well.
Yep. So I would say the expectation for gold is pretty bullish in the event of, let's say, more financial instability, which is kind of obvious, but also the less obvious part is, if there is more financial instability, that increases the likelihood of a recession, which is good for
Mm,
gold. And then also, in order to get out of that, they're going to have to start putting on the money printer again. And we all
yes.
know what the money printer does. That just increases inflation and it increases the value of gold, which,
And Alex made that. I really enjoyed Monday's one with Alex, because she gave us some really solid numbers about what happened in coming out of, or sort of, it was the uninversion, but that recession process was huge. It was at least double that we saw every time over the last three recessions. So that leads exactly that point that you just said.
yeah. So I would say that even if there was, in some other world, if financial stability improved, it will be because of those money printing activities. And then
Mhm.
it's good for gold. So either way, I think gold is going to be quite strong. And then in terms of silver, often silver does follow gold, and
Mm.
there is a bit of a lag between those two, but you are rewarded with silver in terms of it has a much greater upside than gold. So that's something else to consider, in that they are correlated, but silver has more potential that it can reach, which we are seeing now. I think it's basically nearly an all-time high in AUD.
Yeah, so you do get that. It's almost like pull back potential, energy building up, and then when it goes, it can go
Yeah.
quite significantly. So hopefully that answers your question there, Lloyd. We are looking at silver. We just tend to talk about gold because it's the first mover in this scenario, and then down the track, obviously we'll probably be talking more about silver as it's really breaking away, following up the move in gold, I suppose
Yeah.
would be the answer.
I mean, even working at Ainslie, like there was a massive silver run, I think around September, October
Yes. Yep.
last year. That was, I mean, people were buying it like, I mean, it was we were out of everything we had. It was just gone. It was, it was
Yep.
unbelievable the amount of silver that was going off. So when silver goes, it can really go, which is a bit different than gold. Gold doesn't have that upside potential.
Not that, yeah, no, because it's a much bigger market, so it
Yeah.
doesn't have that compressed, ability to do that. Well, Branko, thanks again as always for digging into all of that for us today. Really appreciate that.
Thanks, Chris. Thanks for having me on.
Thanks for everyone for watching. Remember, reach out with those questions. If you have any questions, we try to answer them as best we can. So on the social platforms is the best way to do that. That's us for today and us for this week. So remember, we do have the Easter break coming up. So hopefully everyone stays safe and enjoys their little bit of a holiday there. We won't be back on Monday, but we will be back later in next week to see how everything's moved and how it's all unfolding after that little bit of a break. So thanks everyone, and we'll talk to you then.